Welcome to ShortView Trading, your morning market hit for Tuesday, 3rd of November. What matters today for traders? Well, what an extraordinary sector performance it was on the session. A clear continuation of that rotation that we've been seeing recent weeks into the cyclical areas of the market. And with yesterday, with energy, materials and industrials, along with the Russell 2000, all leading the market higher. Indeed, some of those sectors up 3.5% or more on the day. Oil, of course, performed a wonderful turnaround. The underlying commodity price, having been off sharply earlier in the session, ended up closing up much higher on the day, delivering a key day reversal in that commodity price. And of course, the laggards in this market were the tech areas of the market. You can see it in terms of whether you're looking at S&P IT, S&P Consumer Discretionary, of course, dominated by Amazon, or indeed S&P Communication Services, all about Facebook and Twitter. Those sectors of the market, those areas of the market lagged significantly. And it's interesting to note in that respect, there's some technical price patterns emerging which are really quite bearish for the tech sector. There's lots of double tops or lower highs or bearish price patterns like that, which are really quite troubling. Take a look at Microsoft. You can see it in front of you now, the candlestick chart. A big high on the 2nd of September, a lower high mid-October. There you go, a double top of lower highs in place. You can make similar comments about Facebook, Amazon, Google, all those sort of charts, all trading with lower highs from 2nd of September through to mid-October. And of course, my personal favorite, Netflix, one of the key leadership stocks in the tech arena, not quite as big as the Apples and the Amazons, but a big stock and a leadership stock psychologically, a triple top in place in Netflix. So tech looks like it's losing its leadership status. Cyclicals seem to be taking up the charge. The S&P in aggregate's gone sideways for a couple of months. And what's interesting to note is the positioning of our models. Indeed, every day we update all our key market timing models, the 1 to 2 week models, in our daily rag. You can see that and subscribe to that on our website. They generate critical insight into where the market's going to go over the next 1 to 2 weeks. Last week they had a very clear across-the-board buy message, as we're articulating to you in these videos. And that buy message continues, albeit they bounced a little bit from the very low levels. In aggregate, though, the market remains fearful, it remains well protected to the downside, and it remains oversold, as you can see in this technical scoring system chart we're putting up in front of you now. So all eyes on the election, that is key, but it's also key to note that our models are generating a clear across-the-board buy signal, and the S&P found wonderful support last week at around that 3,200, 3,230 level that you can see in the chart in front of you now. For the full details on how we're playing this market, please see today's Daily Rag, available to subscribers via the website. So what are we watching today? Well, the macro's pretty light. There's a few earnings out there, but really the key, of course, is the US presidential election. Any early indications of how that's going and how that's looking, how the Senate's panning out, and of course, who's winning the presidency and all the marginals will be watched very closely. So that's it from us. That's your morning market hit for Tuesday, 3rd of November. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, where you can follow these videos on a daily basis for free, or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Stay safe. Trade well.